If you're waiting for interest rates to drop before you buy a home, I need you to watch this entire video because I'm about to tell you some things that your friends aren't telling you, that the news isn't telling you, and honestly, that most agents aren't telling you either. If we're meeting for the first time, I'm Tracy. I've been selling here in Silicon Valley for more than 20 years. Welcome to svhomesforsale.com, where we make moving simple and where I share my hard-won real estate knowledge that no other agent is willing to share. I work primarily with tech-savvy sellers and buyers in the 1.2 to $6 million price range. And right now, I am watching buyers sit on the sidelines and miss one of the most interesting buyer markets this area has seen in years. So let's get into it. First thing you need to understand, 7.5 is not a high rate. 7.5% is a normal rate. The average 30-year mortgage rate over the last 50 years is approximately 7.5%. The 3 and 4% rates that you remember from 2021, those were not normal. Those were a once-in-a-generation anomaly driven by a global pandemic. They're not coming back. And if you are basing your entire home buying decision on getting back to 3%, you're waiting for something that is probably never going to happen. Second, and I want you to really hear this, the new Federal Reserve Chair is not focused on mortgage rates. He's focused on inflation. That's it. Rate cuts happen when the economy is weak and when inflation falls significantly. Right now, we have neither. So stop waiting for a rescue from the Fed. It is not coming anytime soon. Third, the bond market right now has one rate hike priced in for 2026, not a cut, a hike. Every single day you wait, you are making a bet that the bond market is wrong. How much of your life are you willing to gamble on that? Fourth, for mortgage rates to actually come down meaningfully, some big things need to happen. The conflict in Iran needs to be resolved. The Strait of Hormuz needs to reopen. Inflation needs to slow down significantly. We have a long road ahead of us. I'm not saying this to scare you. I'm saying it because you deserve the truth. And the truth is this is not a 6-month problem. Reason number 5, the labor market is strong. It's better than expected, actually. And here's the thing about that. When the economy is doing okay, there's zero pressure, zero on anyone to push rates down. Good economic news sounds great. For a fence-sitting buyer, it's actually bad news. Okay, now I want to flip this around because so far I've been talking about what's working against you. Let me tell you what's working for you. Number 6, home prices are flat right now. Flat, not crashing, not in a free fall. And I keep seeing buyers convince themselves that if they just wait a little longer, prices are going to collapse and they're going to swoop in. That is not what the data shows. Flat prices in a negotiable market are actually a gift. You get time, you get leverage, you get to make a real decision. And here's reason number 7, and this one I want you to really pay attention to if you're looking at condos and townhomes here in Silicon Valley. Prices in this segment are already down approximately 15% from their all-time highs. You don't need to wait for the dip. We're already in it. And in many cases, we can still write an offer under the list price on top of that. The discount is already built in and you can probably get a little bit more. Wouldn't that be great? Okay, reason number 8. Here's something that is almost never true in the Bay Area. Right now, sellers who are on the market actually need to sell. The people who want to sell but don't have to, they're sitting out. They're waiting too. So the inventory that exists right now is motivated inventory. That means you hold the cards. As a buyer in Silicon Valley, let that sink in. You hold the cards. That's happened when? 2007, 2008? Okay, number 9. This one is my favorite because Bay Area buyers almost never get to do this. You can negotiate right now in ways that are not just normal for this market. I'm talking about asking the seller to buy down your mortgage rate, asking the seller to cover the first year of your HOA dues, asking for repair credits, asking for repairs to be done before close of escrow by the seller, getting under list price right from the get-go to begin with. This stuff happens in other parts of the country all the time. In Silicon Valley, it almost never happens. Right now, it's happening. And if you have the right agent in your corner who knows how to ask for these things, you can stack these concessions in a way that genuinely changes your monthly payment. Okay, and reason number 10, and this is a big one, so stay with me. You have been trained to focus on one number, your mortgage payment. And for a long time, that made sense. It was the variable that moved the most. But we're in a different era now, and I'm talking about inflation. Inflation doesn't just affect your mortgage. It affects your car, your groceries, your phone, your gas, your furniture, your travel, your skincare, all of it. Here's what people don't think about. If rates go down, those costs go up. That's how it works. A stimulated economy means more spending, more demand, higher prices on everything. But if rates stay where they are and the geopolitical situation resolves, those costs stabilize. So the question I want you to ask yourself is not, when will my rate go down? The question is, how much longer am I willing to put my life on hold while everything around me gets more expensive? Your mortgage payment is one line item. Inflation hits every single line item. Look, the world is uncertain right now. I know that. But here is the one thing that I am completely certain about. An informed buyer working with an informed agent wins in this market. We are ready to write whatever offer makes the most financial sense for you. Not the market average, not a guess, your number. We also have the lending relationships right now offering 5 to 19% down with no PMI at competitive rates. Let that one sink in. Most buyers, they don't even know this exists. So before you assume you can't afford it, let's actually run your numbers. If you want to have that conversation, book a strategy call with us. The link is right below in this video. No pressure, no pitch, just the information you need to make a smart decision.